Welcome to the Farming Without the Bank podcast, the show with a no BS approach to money, hosted by a farm strategy expert and authorized IBC practitioner. Join us as we get real and expose the flaws of traditional financial institutions in order to help farmers take control of their finances, create peace of mind, grow their wealth, and leave a legacy. Now, here's your host, Mary Jo Irmen.
Hello and welcome to today's podcast. Thank you very much for tuning in as always, and welcome back. I just really enjoy hearing from all of you and telling me how awesome my podcast is. I hope you all aren't lying, but I'll take it. I'm not going to be picky. If you have things you want me to talk about, please let me know. I had a great suggestion yesterday of somebody that wanted me to do more of a deep dive into client interviews and how they do things. And so tossing that around, figuring out how and if I'm going to do that. But I really do love the fact that you guys give me suggestions. So please feel free to email me at maryjo@withoutthebank. Send those suggestions over, and I am happy to take them and talk about them if it is going to be a great subject and help everybody. Okay, we have talked a lot about life insurance, and we mix Nelson's concept, the infinite banking concept, in there a lot. And I was doing some book review stuff, and so I'm getting back to that because we have, as agents, there's a group of us that are training together, and we are studying Nelson's book. And it is absolutely crazy, some of the things that I am seeing, even though I've read this book a million times. It's just getting somebody else's aspect of it and hearing how other people read it. And Nelson talks in riddles. And if you have read Becoming Your Own Banker, you understand that everything he does is a story behind it. That is not how my brain works. And so I had a hard time understanding Nelson's book because that's not how my brain works. I am a very direct person. I want very direct answers. I don't necessarily want to think about something I don't know what to think about. So hence why I wrote my book, just to make it a little bit easier and in terms that maybe somebody that doesn't understand life insurance would understand or hasn't been experienced in the business world and those sort of things, because I wasn't. And I wasn't the smartest person at that time because I just didn't have the financial education that I have now and know the things that I know now. And so, yes, I've had to study it. Like you, I came from a world where I did not know what any of these fancy financial terms were. So anyway, we have been studying Nelson's book, and today I want to talk to you about the chapter, Creating a Bank Like the One You Already Know About. And this is so good because this chapter in particular, he talks about how expensive it is to create a bank. And for a long time, I looked over this chapter and went, yeah, okay, Nelson, I get the concept. Like I get the big picture that we're creating a bank and it takes time and it takes money and, yeah, I get that. However, a lot of you that are either clients or a lot of you that are sitting on the fence, this is the thing that's hanging you up the most because you have to capitalize. And so this chapter in Nelson's book is 2 pages. And I have mostly all of the 2 pages highlighted, but I'm going to break this down. And this is all we're talking about today, is creating a bank like the one you already know about. And the first thing that Nelson says in the very first paragraph, he says, first study the business that you have a firm grip on, what it is all about, and feel that you can run such a business. Without the confidence, you are fighting a lost cause. So if you're farming, you study farming. If you're ranching, you study ranching. I know this for a fact because y'all are constantly reading. You're reading about what can you do better for seed and chemical You're reading about what can you feed your cows? How can you breed them better? Can you do rotational grazing? What kind of grass, right? What are the nutrients we need to give them? I grew up with that. That was our supper conversation when we grew up. What are we feeding the cows? What is the ration? What is their weight gain per day? As I say in my book, that was conversation. You study whatever it is you want to know. So if you want to create a bank, do you not need to study that? You need to study what is involved in getting a bank started. And Nelson says you must get some capital. You must have some money to start the bank. You need money to start any business that you have. You need money to start that business. It doesn't matter. Except when you start a bank, you're going to need like $20 million. And so do you have $20 million sitting around? Probably not. So how do you start your own bank then? It's crazy. These guys that are starting banks on every corner, they're spending $20 million to do so, right? And then he goes on to say that we only see 1%, right? If we have an iceberg, the majority of the iceberg is unseen. It's underwater. So there's a lot going on to starting a bank that we're not seeing. And you need to use your imagination. And he talked about that in the very beginning of his book. Imagination, reason, logic, and prophecy. You need that for infinite banking. You need that. It is a requirement. Now, I don't know if you don't have it. I don't know where you can go get it. It's not something you can buy at the store. Some of us were blessed to have that in line. Some of us really, when we got in line, God's like, here you go. Here's your imagination. He gave a little extra to Nelson. And so those of us that don't have it, like myself, not huge on creativity, I would have never learned this myself. I would have never thought of this myself. I have to push that imagination. I have to talk to other people. My brain works a little bit differently than most, right? Well, I shouldn't say that. My brain works like my brain, but how society wants my brain to work is not how my brain works. I'm not the easy student that just follows along like sheeple. And I'm challenging everything. I'm looking at everything. I'm asking a bunch of questions. Why? But I'm a very hands-on learner. So it takes me a little bit longer to learn things. So I can't just see something and get it. I have to touch it. I have to feel it. I have to move money around. I don't know if you guys have heard me say that before, but when I learned about this concept, I actually came home, got my daughter's Monopoly money, set it on the floor, and pretended like this was the life insurance money, this was my money. And I was using it because I don't have that huge imagination to just see it right away. There's nothing wrong with that. It's just how some of us learn. But there's stuff that's unseen when we start a bank, and we need to study it. So just like we would study if we wanted to buy land and get into farming or ranching or storage units or rental properties or any other kind of business, you're going to study that so you become the expert in it. You need to have some capital to do that if you're going to start a business. You don't just study it and never go anywhere because you need the money, right? So you know that you're going to save up to start that business. This is the exact same thing. We are starting our own bank. We are starting that process. We need some capital. It is one of the questions that I ask in almost every one of my client interviews. Were you upset because you didn't have access to all of your money right away? Did that hinder your decision? And they all said no, because we're looking long term. It didn't matter. I was able to give up some of that liquidity because long term, I'm going to get that back. Long term, it's going to be better, right? When we start a business right away, we're not going to make money, but we need to put some money in. So again, using your imagination and thinking that through. But you don't need $20 million to start your own bank if we're going to use this system, because the life insurance company has already started the system. We get to put it in and we get to start several branches, just like the bank has several branches. When one branch makes money, then they start another branch, right? Pretty soon they're around every corner. It's not easy when you start a business. When you started farming and ranching, you didn't make a profit right away. There are some years you don't make a profit. That's business. So when we start our own bank and we start our own policy, we have to put some of that capital in. We're not going to get all that money back immediately. That's the starting period. And as Nelson continues to talk about starting the bank, he says, do you notice that you have been paying out money for years and getting this business established? Because you're not going to be profitable. So again, goes back to the life insurance company. Takes us about 4 to 5 years before that thing starts to cash flow itself. And every dollar we put in turns into something that acts like a deposit, and we have access to all that money. So when that starts to cash flow, great, awesome, fantastic. We had to sacrifice in the beginning to do that. Nelson also says when you start a bank, you have to put in some capital. Then you get some deposits, and then you lend the deposits. In a proper bank, these 3 items bear a prudent relation to one another. So if you put a deposit in, then you can lend that money for a loan. So we have to put some capital in so we have something to borrow against, right? There is a prudent relationship between the capital and the assets, which is to say the loan on the books and between the loan and the deposits. There is a prudent relationship. You cannot take loans and not pay them back. You cannot overlend. The life insurance company will not let you overlend. A bank will overlend because they just keep printing money. And we've talked about this in a past episode. So the bank, if you put $1 in the bank, they go to the feds and get $10 and lend out $9 that's fake. So they can turn money. When we put money into a life insurance policy, we can't do that. But if we put $1 in, we can now borrow that dollar. But just like the bank, that dollar has to be paid back to the life insurance company. If you don't pay it back, what happens? The policy could lapse. Don't be doing that for 10 years. If you do that, you're going to end up demolishing your bank. It's going to fail. Can you imagine if you went to the bank and they lent money to you, they lent money to everybody and nobody ever paid it back? What would happen? They wouldn't have any more money to lend because you're not replenishing it. They need money to flow in order for you to be lending and borrowing. And it's the exact same thing. If you borrow money from your policy, you need to pay it back so that you have it there to borrow against again. If you borrow money to buy a car, you got to pay it back. So 4 or 5 years later, you have money to buy another car. You have the interest. Anything above and beyond what the insurance company is paying, you have that interest. But it is a prudent relationship between the capital and the assets. Okay, you have to be prudent with your money. And if you purchase the book, which I highly encourage you to do, get the Becoming Your Own Bank book, he goes on to talk about a bank in Texas, the Midland Bank, that went bankrupt because they overlent. They weren't managing their money. They weren't being prudent. How do you fail when you're lending money to people? You overlend. You're not performing. Your assets are not performing. You want performing assets so that you're making money. You don't keep a tractor that's not performing. You don't buy cows and keep those cows if they're open, right? If you have a cow that's open, she is either going to town next year or the following year. We are not keeping her. Nelson says, in September of '83, First National Bank of Midland had a loan portfolio of $1.5 billion, and 26% of those loans were non-performing. They were not getting their money back. This is a big downer in the banking system. When this sort of thing happens, someone has to support the situation, which is normally the function of the stockholders. Because of losses, the stockholder equity lost 87% of its value, down to $12 million. Remember the prudent relationship that Adam Smith outlined above, $12 million in capital in relation to $1.5 billion in loans is a shaky bank. The bank needs to get repaid. You need to get repaid. Here is a great example. I have a client. that canceled his policy just this week as I'm recording this. Why? Because he went to take a loan on his policy and there was no money. He paid his premium and his cash value did not increase because he never paid a loan back. He was a client of mine for 11 years. He never paid a loan back in 11 years, not even the interest. So my early clients, I did not require them to read a book. I did not require them to study why they wanted to be a banker. And guess what? His policy was not performing because he was not paying any interest. He was not paying loans. He was paying premium. He was paying minimum premium. He wasn't even paying at all. He was paying minimum premium, but he was not paying the interest back. Well, that interest, if you listen to one of my other podcasts, that interest is going to compound from year to year. It is going to destroy your bank. It's going to eat up cash value. You have got to be prudent. You have got to pay those loans back. This is all part of starting a bank. This is exactly like the bank in town. They are not going to lend money and not allow you to pay it back. This is why they're taking collateral, because their butt's on the line because they lent you money. What if you don't pay? What if those are non-performing loans? You must treat your life insurance policy and you must treat this concept as if it were a bank. If you do not, it is not going to work. People always ask me, what is the biggest risk of doing this? I will tell you right now, the biggest risk is human nature and the fact that you're going to steal your own money and not pay it back. That is the biggest risk. Everybody is concerned about the dollar crashing and hyperinflation. Everybody is concerned about the life insurance company and how secure they are. Never does somebody say, what if I don't do what I'm supposed to do? That is the biggest risk. That is what Nelson is talking about, being prudent. You must be prudent if you are going to use this concept. It is not for the meek and the mild. It's not for that person. You must understand what you're doing. Put your banker hat on when you're using this concept. And he continues to say, reading between the lines, it was pretty evident that a lot of those non-performing loans were made to the members of the board of directors. They were making loans to themselves to invest in the oil business where they were going to make a killing and neglecting to repay the loans. So who was stealing? Not even the customers, the board of directors. There was a big energy crisis just a while before this. When the oil business returned to normal, these folks lost both their oil business and their banking business. Had they repaid their loans plus interest, their bank would still been in operation, but greed prevailed and did them in. I don't know how else I can say that. Repay your loans, people. It's just that simple. Remember how I said I need to be direct? Some of y'all need to hear me be direct as well. Repay your loans. Why does Mary Jo make you read the book? Because you need to understand and study the concept and know what you're doing. I'm going to tell you, you can destroy it by not obeying the basic rules of banking. Loans have to be paid back, or you can kill the best business in the world. Again, Nelson is sounding like a broken record, kind of like me. He also says you must admit that getting into business this way is very costly and time-consuming. It will be a long time before you show a profit, probably as much as 10 years. Well, isn't that interesting? It takes 10 years for the bank to make money, and it takes about 10 years for us to break even in a policy. Most businesses will tell you it takes 5 to 10 years before they make a profit. It takes about 7 to 10 years before your policy is going to break even. You have to capitalize. We're starting a bank. And he says there's a much easier way to accomplish the creation of your own banking system. And the mechanism has been around for over 200 years. It is tried and true. It is what I talk about every day, all day. Dividend paying whole life insurance. You know, in this chapter, Nelson also talks about the fact that as energy, we think of coal, we think of wind now. We think of nuclear fuels, water, or fossil fuels. That's what's producing our heat. That's what's producing our power. How come nobody ever talks about wood? How come nobody ever talks about using wood and using that to generate electricity and power? Of course, Nelson thinks about that because he was a forester. But when we think about banks, he's just challenging us by telling us that little story. He's just challenging us to say, hey, how come we're not thinking about this differently? There is an easier way to accomplish the creation of your own banking system. The mechanism has been around for 200 years. It is tried and true. Yet we are not thinking about it because we need to think differently. Just like with energy. Is there something else that we're not thinking about? Right? Because we want to go to fossil fuels. And so how many of us are challenging that thought process? Oh my gosh. Don't even get me into renewable energy. Anyway, regardless, it comes back to, is there a better way to create a banking system that we can control? Absolutely, all day long. Because Nelson says if we used a paper mill, it could produce 125% of your mill's need for electricity. What do we do with the surplus power? We sell it. What do we do when we have surplus money in our policy that we don't need? We can lend it to other people and we can play banker. And there is no regulation saying we can't do that. It's a private loan. People do it all the time. And those of you listening are probably saying, oh my God, Mary Jo, never in a million years will I have enough money to lend to other people. Well, maybe not. Maybe some will. We never know what's going to happen. Once we start utilizing our money correctly, once we start thinking about things correctly, we have the money. And finally, he ends with all the ingredients are already there in place. All you have to do is understand what is going on in such insurance plans and tap into the system. And I actually think that's a great ending. Are you going to tap into the system? Are you going to learn what's going on? Are you going to study it? And I don't mean you need to eat, sleep, and breathe it like I do, but are you willing to read Farming Without the Bank? Are you willing to read Becoming Your Own Banker? Because let me tell you, the people that read both of those books understand the concept far better. I had a gentleman that I met with last week. He emailed me 4 different emails with questions. And by the time I got to the last email, he said, oh, that was answered in the book. I read it again. And that's fantastic. Love it. Absolutely love it that people are reading this book more than once, reading my book more than once, reading Nelson's book more than once. You guys, I've read Nelson's book a bazillion times, and I'm still learning stuff because I am always in a different position. You should be rereading my book. You should be rereading Nelson's book all the time because the answers are there. You don't just skim my book and make an appointment. Read the book. If it took you 2 hours to read it the first time, it's probably going to take you an hour to read it the second time. But don't skim over things like I was doing in Nelson's book because I was missing things because they didn't make sense. I know who's read the book. And the reason why you have to read the book before you meet with me is because I want you to be an honest banker. I don't want you canceling your policy because you've never paid a loan back and it's not going well. Because guess what? You've never planned to pay the loan back. Yeah, that's not how this works. That is not how this works. And this particular individual who I absolutely love chose to not come to me for education, chose to not come to me for questions, chose to not read the book, chose to not attend any financial seminars that I've put on. They didn't want to know how to run the business. They just wanted to be a part of it. And guess what? You can't be a part of something you own and control. You have to know what you're owning and controlling. The mechanism has been there for 200 years. It's tried and true. There is nothing new about this. There's nothing magical about this. It just is what it is and it works. You are the biggest risk factor in all of this. If you can't manage your money, if you're not going to pay attention to what it is, that is the risk. but we have to start the banking process. We have to know the banking process. We have to put our banking hats on. Okay, all. Thank you for tuning in. That is all I have today. If you have not gotten the book, if you've not gotten Nelson's book, go to farmingwithoutthebank.com. Go to store, click on the store. The books are there. I have Farming Without the Bank in audio. Okay? There's no reason that you're sitting in a tractor right now. You're sitting in line at the ethanol plant. You're sitting in line waiting for anhydrous, whatever you're sitting in line for. You farmers out there farming right now, you have the opportunity to listen to that book. It is a quick read. I think the recording is like an hour and a half. It's super, super fast. And you can even speed it up if you like. So grab the book, farmingwithoutthebank.com. If you have comments, questions, concerns, Mary Jo at withoutthebank.com, and I would be happy to answer those for you. Otherwise, I'm going to check out. And until next time, you guys have an absolutely fantastic day.
Thanks for listening to the Farming Without the Bank podcast. We hope today's episode has inspired you to take control of your finances in new ways. Don't forget to check out our website, farmingwithoutthebank.com, and engage with us on our Facebook page, Farming Without the Bank. Join us next week as we smash more financial myths and empower you to accomplish your financial goals.